Welcome everybody to another AstroFX YouTube video. Now recently we have been posting on our YouTube channel, but we haven't been really focusing directly on technical analysis and charts. Our last YouTube video in terms of Technical Tuesdays and breaking down some analysis and so forth for everybody, all of our subscribers and viewers, was around 4 to 5 months ago. Me and Nat recently, throughout the summer, we have been, we wanted to take a little bit of a step back, go traveling, have some fun and so forth. But over here in the UK, it is time, well, looking at the window right now, grey skies as per usual, but we're coming into the autumn season. So autumn season for us, winter season, is time to step up the game once more and improve our work rate, and that includes improving our YouTube videos and coming back with Technical Tuesdays and giving everybody an insight into our market analysis going forward. 2 days ago, we actually released our updated AstroFX members zone. We just had a little bit of a revamp, not just on the members area, but also our AstroFX website. So that's out now. We've had some great feedback from all of our students so far, and we've more or less made it into an online course, and a lot of the technicals that we post are more or less being posted in there each and every week. 2 main videos in there. So I'm not going to be doing Technical Tuesdays every single week because we like to keep that for our students. However, I am going to be going into random currency pairs. Like today's video focus is in fact the EURUSD. Now, I've had a lot of questions recently from students and other people around on social media as to what I think about the EURUSD. For the last 20 months or so, it's been absolutely dead. So I'm going to give you guys a breakdown on the charts. So right here in front of us, we're going to start on the monthly time frame. Now, the monthly time frame on EURUSD, what we can actually see here, if I can just get rid of some of my key levels, what we can actually see is a huge area of consolidation. Now, recently, not too long ago, we had this huge fall and decline from the barrier of 1.4. Recently, also, we have just been consolidating back and forth between my monthly area of support, which you can see right here, 1.0500, and the next barrier to the upside is 1.1450. So that overall, the way we break our charts down, and the way we teach our students is to, firstly, if you looked at EURUSD on the monthly perspective, zooming all the way out, imagine none of these key levels are actually on the charts, okay? It can be a little bit daunting, especially if you're a newbie in the market and have no prior structure to your technical analysis. It can be very difficult to actually break this pair up. But the way we do things and our steps and so forth, we actually break the pair up and we segregate and basically cordon off the most recent and relevant area of price action, which you can see right here. You go ahead and count the candles. It's around 20-21 weeks. We're actually maybe approaching 2 years of consolidation between that zone, which is 950 pips. So the market at EURUSD has been consolidating 950 pips. We've been trapped. I would say straight off the bat, this currency pair in particular has been extremely difficult to analyze on smaller time frames and trade as well. The majority of the EURUSD moves and the movement has been quite sporadic, and it's been more or less 50 pips, 100 pips, maybe 80 pips here and there, and it's been off the back end of fundamentals, which I'll go through in a moment. But right, so for this pair, we can see we've tried to breach. We can see 1, 2, 3, 4, 5, nearly 6, 7, 8 times in the last 20 to 22 months, where the EURUSD has approached that zone. And I personally myself have fought and done my technical analysis, and I was like, yes, Euro's going to break to the upside now. Euro's going to break to the upside. It breaks through, touches, hits the barrier 1.1450, back down, back down, back down. When a market does this, it's usually waiting for some kind of fundamental announcement to come through before it can actually use that as a back-end factor in order to give it that boost through the technical standpoint and the key levels in order to maybe reverse trend or continue trend. A trend continuation in the case of the EURUSD right now would simply be obviously to the downside, okay? We've had more taps on the resistance zone 1.1450 than we have at our support zone 1.0500. So that tells me that we've attempted that so many times and it just keeps getting slapped back down, that we could maybe even roll over soon. However, I'm a little bit 50-50 on the EURUSD at the moment, and I'll tell you why. So The zone of 950 pips, we also have the weekly area here, 1.0975. Now, as you can see on the 1.0975, we have 1 spike, 2 spike, 3 spike, 4 spike here. We breached it, tapped, came into that region where I have my highlighted strip there. We've come all the way back up to 1.1450 and come back down again to give us another tap, another tap. So we have multiple rejections from that weekly support as well. So we can maybe narrow this down now into the range from 1.0975, which is our weekly support, to our resistance, monthly resistance, 1.1450. So this is what is important to me right now, this area on the EURUSD. So let me just bring this across. So if you focus on this area on the euro on the monthly time frame, I don't look at charts hourly, below an hourly, like 30-minute, 15-minute, and so on. I always like to come from top to bottom. Now, in a case of the euro, which you'll see in a minute when I step down the time frames, whereas we've just seen erratic price action, it's very, very hard to actually find trade setups in my personal how I trade and how I maybe like to hold a trade for maybe a week or so, because I'm not a scalper for you guys who are new to our YouTube channel and so on. This market in particular is not for me right now. However, technically, if I would just remove the candles, we have our moving averages. The blue moving average is crossing the red moving average. And it's the first time it's actually done this, okay, since August, okay, 2014. So we crossed to the downside, we were trending to the downside for quite some time. And it's our first time now we've actually crossed back over. That's not to say go and enter trades, that's just a warning for me and a heads up as to, okay, potentially get ready for EURUSD to move to the upside. So that's one technical factor. And as you notice, all of the spikes prior to my monthly area of resistance, we did not have a crossover then. We can see also where the moving average, the blue moving average, acted as a dynamic area of resistance for this, where we can see the spike here, spike here, spike here. But now we're crossing over. So that's one thing that I would personally note down in my journal, note down in my watch list notepad right here. It's always, always handy as an analyst, as a trader, to have a running commentary on your currency pairs as to what's going on. So that's just a monthly. So that's just a heads up as to what can happen maybe soon. If I step it down to the weekly time frame, stepping down to the weekly time frame, let me just remove this. We can see in further detail, we've zoomed in right now, and we can clearly see that that price action is completely all over the place. It's very, very erratic. A lot of false movements as well. If I just take your attention to here and here, on a weekly basis, we really need to close above the monthly resistance and sustain a weekly, that's right, a weekly close above that level in order to then say, okay, cool. Potentially now we're going to be aiming for our next weekly resistance, depending on your rules. But my rule is, okay, monthly resistance broken. My next weekly is a potential target around 70 to 80%. So 1.1925 is my next upside target if we get a break on a weekly basis, because you can see these weekly candles here, okay? Many people were getting excited around here. Boom, end of the week, close back below. Same thing here, boom, up, back below. However, we also need to take into consideration that these could be potential lower swing highs. Okay, ready for the market to come down and make new lows. Who knows? So I always like, and I'll give a point out there, a little bit of a tip, is to when you're doing your analysis, always take screenshots, always do your journaling. This is what I always tell anybody who comes to us at AstroFX. And again, I've gone into great detail about journaling and exactly how to do it in our AstroFX member zone in our online course. So potentially now we could see a downside continuation. If we were to see a downside continuation on the EURUSD, we would have to break below the monthly support. Again, on a weekly basis, if we had a weekly close below the monthly support, my next target is going to be 1.0020. So it's more or less one. So €1 would then be worth $1. Now, it's interesting I can come out and say this, and my technicals can maybe point in that direction if we do get the break below, because there's a lot of the other week we had Federal Reserve announcements, and again, many people who know AstroFX, we just focus on 90% technicals. We do believe if you can read the technicals correctly, it often gives us a huge insight as to and into what the fundamental factors will do afterwards. Okay, so Will there be something or some kind of event? Because people are on about raising rates and so on. I think if the rates are raised too much, then there could be a huge movement in the market, especially on the USD, on the dollar index. But there could be some kind of event that may come out, non-Fed related, who knows, that may push these currency pairs lower in the case of the Euro USD. I think there's a war on currencies and a war on cash at the moment. Banks are broke. It's really, really difficult to even get £3,000 out of the bank without them telling you to come back in a few days. So there's no money left in circulation in terms of cash. A lot of it is now digitalized lending and credit. That's what we're going into. Even if you think about it, the Visa cards, chip and PIN has now gone to, I know it's not much, but you have the contactless these days, okay? Online banking, again, digital. So I reckon if the euro against the dollar can come down to parity, I think there could be some kind of event and some big change. They're on about resetting the debt and so on. And again, I've mentioned this on other videos. We're now into another 7-year cycle, especially right now, coming into October. We could see some great market events, okay? We could see some central bank announcements and big ones. We could see some world events. I've already mentioned that the terrorism and stuff like that. You can go back every 7 years and you're going to see something significant going on, which hits the world markets and the currency markets as well. GBP USD, I'll save that for another video. I mentioned on my Brexit video, you can go back and look at that, that the GBP USD is potentially going to come down to 1.5, I think it was. I haven't got the chart up in front of me, but anyway, a lot of these currencies are just getting destroyed right now. And you can go back and just look into the cycles and go and do your research for yourselves. So anyway, technically, Euro USD, we've got the monthly moving averages crossed over, the weekly moving averages now crossed over, as you can see right here. Okay, so there's two factors there. Daily, what we're saying on the daily, if you remove the line there, we've got the daily MAs that have crossed over as well. But looking at the daily chart, there's a few things that interest me. Again, it's kind of, I'm torn between two worlds on the Euro USD. So let me show you. I have a fib from a significant low up to a significant high, okay? And I went through this on the weekend with a few students and so on. And what I can see here is I'm currently resting on this trend line as well. Okay, so 0.1, 0.2, and 0.3. Around 0.3, as you can see, we have the trend line. The 61.8 fib is just below that, where we spiked right here. And I've already mentioned that a lot of these market movements on the Euro USD are mainly being driven by fundamental factors and just talks that aren't even really coming into fruition by central banks and so on. And many people know that, well, not many people know, but from our videos, we've already talked many, many times about how the market is very, very manipulated, and these guys will often wait. The market is very, very well timed. It'll often wait for some kind of event to occur, and that's what I think we're going to be waiting for here on the euro, for it to break my monthly key level to the upside or downside. I'm already ready either way. I know where each market movement on the euro will lead to if we break both. That's the importance of key levels and getting them correct from top to bottom. But yeah, over here, so what I can see is A, B, potential on the 61.8. We also have the trend line there acting as a guide for me on this piece of analysis. But if you look at where my target projection is over here, I've been using this fib for about 4 or 5 years, okay? People use different fibs, selling at D, back patterns, Gartley patterns, and so on. This is the most simplistic fib you can use, because all it is the C point is more or less projecting where a higher low is in this case, and then the D extension is projecting where a potential higher high may unfold. So this is lining actually up bang on with my weekly resistance, which I've already mentioned, and I have specific rules in place. So it's all about building confidence for entries, but more importantly, confidence for your exits and targets as well, because that will give you the confidence in order to actually hold the trade and try and milk it as long as possible. Because remember, it's all about the pips, risk reward, and so on. So I've seen that there. So that's in my mind. So I can take that off. I've already got this journal. The next fib that I've spotted on the euro as well is, in fact, from A up to B there. And again, we're actually resting on a 50% this time, but we're still above that trend line. So that trend line is supporting the price for me. Unless we break that trend line, could I then consider maybe going short? In my case anyway, but Euro USD on the whole, I hate the thing right now. So what we can maybe look for, we've got the moving averages up on the monthly, the weekly, the daily. We've got the fib, we've got the overall fib, and we've got this little mini fib here as well. A clean break and close on a daily basis above my counter trend line there could be an entry, basically. Could be an entry, but today we have an engulfing pattern and we're potentially going to come back down. As I say, this is a nightmare to trade. I will not be looking at EURUSD on anything lower than a daily time frame at the moment, because it's just a mess and I haven't really got time to piss about with the EURUSD and start to monitor my trades on this pair, because again, the 50 pip movements, the 80 pip movements, they're coming very, very fast off the back end of fundamentals, and I haven't really got time to sit there and watch the charts all day. So my D extension is coming up at the monthly resistance there, which could be a potential, who knows. However, the conflicting factor on this is that I found another fib as well. So from A down to, I'm going to take it just on this weekly support, and then we have the A, B, C. So this isn't a retracement because my B point's here. Anything beyond behind the B point is a no-go, obviously. And we have a run up into the 61.8 there as well. So this could potentially fall also. So what I'm going to do, I'm not really going to be trading this. So we have my target 1, target 2 there, perhaps, who knows. I'm not really going to be trading this until it gives me a solid breakout either direction. We're going to break the counter trend line, which I've just placed on there, or we're going to break the overall trend line and see new lows, who knows. But I'm going to wait. I'm going to be monitoring this throughout the month of October. We could see something significant in the world. Again, I've already mentioned about these fake terrorist attacks and stuff where they can come in and force new laws on people. You know, it's propaganda at its finest, and we do not want to be sucked into all of the negativity that is put out there in the news. So price is king. News is negativity. All right, so that's the EURUSD. A little bit of a technical breakdown for you guys. I don't really recommend doing any trades. I'm not going to give any trade setups, just highlighting some things that I'm seeing on the chart. So other than that, our new AstroFX website is actually, well, it's up, but we haven't finalized everything there. We're rebranding and we're switching a few things up on our side. And we've met some great students recently as well from across the world. We went over to Toronto where we had a little bit of demand, and we met some other people who have been following us for quite some time. Those who are keeping up to date with our Instagram posts have seen all of that. And yeah, it's just been a great year. It's been a very, very busy year, great year. Personal life, it's been a crazy change. And we're looking to just push Astro even further and further and further and just continue to improve as we go along. So apologies for the lack of Technical Tuesday videos, but I'm going to be getting back on them soon. Now, I'm going to Greece Santorini next week, where I'm probably going to do some technicals out there, and a mini vlog as well. I'm going out for 10 days, which will be my last break probably this year with my family. So that'll probably be the next time I'll be checking in, but I hope you enjoyed the EURUSD analysis. Trade safe. The last thing I want to drop in there, though, is the DAX. Not the DAX, sorry, the Dow Jones. On my last vlog, the student vlog, which is about 2-3 videos back, I did a short trade, which I'm still actually holding, and I will be showing you the results once I've closed this on the DAX. Again, 7-year cycles. I'm expecting this to fall quite a lot, to be honest. I've got more or less a 1,000 pip or 1,000 point target on this, and I'm around 45% of the way there. So as you can see, my entry was up here, nice tight stop. So it's a risk reward of 1 to 5. You can go back and see where I actually entered this trade as well, but I will be catching up on this very, very soon. So just thought I would drop that one in there for those people who are asking me, because I did have some comments on that video asking, you know, did this come into profit and so on. So I'm halfway there to my target. So I'm just going to let this one hold. Soon I will bring my stop loss down to maybe cover. Once I'm 50% my way to my target, I'll bring my stop down and minimize all risk on that trade. So hope you enjoyed the analysis, and be checking back in soon. Thank you.